I grew up in Canada, where the entire trade mechanism is built toward trading with the United States. Canada is actively seeking to diversify its own trade relations. It's currently trying to finalize a free trade deal with a bloc of South Asian countries.
When President Trump talks about trade, he focuses on power using tariffs to pressure other countries into making deals. But now, in the summer of 2025, something unexpected is happening. Fewer countries are showing up to negotiate. Sure, some talks are still happening. Canada is at the table. The EU hasn't left. Mexico is still in contact. But behind the headlines and official statements, America's closest allies are stepping back. And while Trump's tariff tactics might look tough, they're not just damaging international ties, they're also hurting the U.S. economy.
This is America's biggest trading partner. Other countries are doing similar things. They're trying to figure out how to be less reliant on a trading partner that is unreliable and unpredictable.
After months of slow progress, Trump's new round of tariff letters hit hard. He placed 35% taxes on Canadian goods, 30% on exports from the EU and Mexico, and 50% on key items like copper and medicine. The response was calculated. Canada sped up trade deals with South Asia. The EU held back its response, but prepared a massive $70 billion hit list. Mexico stayed in talks, but hope was fading. None of these countries cut ties completely, but none see the U.S. as a trusted partner anymore. Now, they're building long-term plans without America at the center.
Last 3 months, this is when the tariffs went into place and companies either decided to absorb some of that, get inventory ahead of that deadline, or start to pass some of that on to the consumers.
While as allies quietly stepped back, the real impact started showing up in the U.S. economy. The 50% tariff on copper triggered immediate alarm. The U.S. relies on imports for over half its refined copper, mostly from countries like Canada, Peru, and Chile. But U.S. refining can't keep up, so tariffs just made prices jump without adding supply. It was the same with Brazilian coffee. With a 50% duty in place, prices soared. But coffee isn't widely grown in the U.S., except in Hawaii, and replacing imports isn't realistic. That meant American shoppers paid more with no real benefit. Meanwhile, U.S. businesses and banks began tracking the fallout. CBS News reported companies tried to absorb the extra costs, stockpile goods early, or simply raise prices. Banks also watched closely to see if inflation-weary Americans were cutting spending or falling behind on bills. Another warning sign was investment. IPOs and company mergers slowed down as high costs and trade risks made businesses cautious. This wasn't just about short-term profits, it raised real concerns about where the economy is headed, as Trump kept pushing the Federal Reserve to lower interest rates, especially to boost real estate. Analysts pointed out that his own trade moves had caused many of the problems. But beyond inflation and investment slowdowns, a deeper shift is taking place. The EU is preparing its next round of retaliation, targeting U.S. services, digital platforms, financial products, and intellectual property areas where the U.S. usually has the upper hand. Losing that edge would mean losing income in global clout. At the same time, Canada is reviewing export permits for key resources like copper, uranium, and rare earth minerals. If those are restricted, it could seriously disrupt U.S. supply chains for electric vehicles, AI chips, and clean tech manufacturing, according to the IMF. A full trade breakdown with Canada and the EU could shrink the U.S. economy by 0.4%, and long-term investment in high-tech industries could take a hit. What's unfolding isn't just a trade fight. It's a deep economic divide, and the U.S. is at risk of being left out.
Well, I think that's the key question, is what deal will be credible, will be sustainable, given the extreme uncertainty that's coming out of the Trump White House.
President Trump says that tough tariffs are a sign of strength, but in reality, they've led to isolation. While U.S. allies form new trade partnerships, America is dealing with higher prices, nervous markets, and a shrinking role in global trade. In the end, the real issue isn't how high the tariffs are, it's how much trust remains once it's all over. And right now, America's trading partners are quietly creating a new global system, one that no longer depends on Washington.
Leaders say trade between the U.S. and EU could be effectively cut off if Trump goes ahead with a 30% tariff that he threatened over the weekend.
America's global power hasn't just come from its military, it's also been built on strong, long-term trade partnerships. Now, that foundation is starting to crack. If President Trump keeps raising tariffs on close allies, the U.S. faces more than just quick pushback. It risks losing its key place in the world economy. Canada is changing its trade direction. The European Union is getting ready to respond. And together, these shifts are sending a clear message. The world is starting to move on without U.S. leadership.
The deals are made. There are no deals to make. They would like to do a different kind of a deal, and we're always open to talk. We are open to talk, including to Europe. In fact, they're coming over, they'd like to talk.
President Trump thinks high tariffs will pressure other countries into making better trade deals. But if those countries decide to stop depending on the U.S., the damage could last for years. Once global supply chains shift, they don't easily move back. Companies might move production out of North America. Trade routes could change for good. Major U.S. industries like finance, tech, and medicine could face new barriers and higher costs overseas. And if other countries stop relying on U.S. systems like the dollar or American tech platforms, the U.S. could lose a seat at the table in shaping global roles for Europe. This isn't just an economic dispute, it's a serious strategic break. Leaders in Brussels say a 30% tariff on EU goods could wipe out trade between the U.S. and Europe. The U.S. currently buys over $600 billion worth of EU goods each year, but only sells $370 billion in return. At first, the EU paused its $25 billion counterplan, hoping for talks, but they've already lined up a bigger $70 billion response. If negotiations fail, their message is clear. They want to avoid conflict, but they're ready to hit back hard if needed. What's most telling is where they plan to strike U.S. service sectors, like tech and finance, where the impact would sting the most.
Last month, you look at the data from Statistics Canada, which looks at the month of May, and we saw the highest amount of merchandise exports to non-U.S. countries since at least 2021.
Canada's response has been quieter, but just as impactful. After Trump's tariff announcement, Canadian exports to the U.S. dropped fast. In May 2025, Statistics Canada reported only $41 billion in exports to the U.S., down 25% since January. At the same time, exports to other countries rose to $19 billion, the highest since 2021. Canada is now sending gold to the UK, oil to Singapore, and medicine to Italy. Even more telling, it's reopening trade talks with India, despite past tensions. For Alberta and Saskatchewan, reaching India's post-crop market is vital. This isn't just spreading trade, it's a major shift. Prime Minister Mark Carney isn't making threats. He's calmly building an economy that no longer relies on the U.S. and Canadians support it. Trump's strategy is all about pressure, but pressure without flexibility can backfire. The EU isn't giving in. Canada isn't waiting around. If Trump keeps going this way, the U.S. might win a few short-term deals but lose the unity that once gave it strength. By trying to boost its power, Washington could end up weakening its own global role. Allies won't storm out in anger. They'll quietly move on with new partners, new trade paths, and a future that doesn't center on the U.S. trust. Once broken, it's hard to earn back. Trump's tough stance may look strong now, but the long-term picture is different. As Canada reshapes its economy and Europe gears up to strike back, one thing is clear: the world is moving forward with or without America.
Announced a 35% tariff on Canadian goods to go into effect on August 1st of its own. The letter says the 35% tariff will apply to all Canadian imports, separate from the existing levies on autos, steel, and aluminum.
On the evening of July 10th, the world saw a new tariff move from President Donald Trump, a flat 35% tax on all Canadian imports, starting August 1st. Not just on cars or metals like steel and aluminum, on everything. This time, there was no press conference, no questions from reporters, just a letter posted online, addressed to Canada's Prime Minister. It read more like a threat than a policy, more like a warning wrapped in anger. It might sound like just another one of Trump's many trade actions, but to Canada and the global economy, 35% isn't just a number. It's a clear sign that the North American partnership is breaking down, and now, the big question isn't if a new trade war is coming, but just how far it will go.
And frankly, Donald Trump just treats Canada like trash over and over and over again. We're supposed to be in a negotiation to try to secure some kind of framework deal to go forward. This letter is just a picket fence of lies.
Trump says the new tariffs are because of fentanyl shipments, unfair trade rules, and Canada's farming system, but none of that is new. What is new is the timing and how fast things are escalating. This latest threat came just weeks after Canada agreed to drop its digital services tax, giving up nearly $1 billion Canadian dollars a year, just to restart talks with Washington. Canada expected real engagement. Instead, it got hit with a 35% threat. This is classic Trump apply pressure, raise the stakes, take control. The letter even hinted that Canadian companies could dodge tariffs by moving production to the U.S. It wasn't a suggestion, it was a demand. The message is blunt. If you want to sell in America, build inside America or pay the price. Canada's response was calm. No fiery press conference. No angry speeches. Prime Minister Mark Carney stuck to quiet, strategic diplomacy. Canada set a private deadline of July 21st to reach a deal. Behind the scenes, ministers are working with U.S. officials and global allies. But don't be fooled by the calm. Inside Canadian politics and business circles, pressure is building. Some say it's time to hit back. Analysts called Trump's letter an economic missile and warned it may be time to stop turning the other cheek. Carney understands the stakes. Trade between the U.S. and Canada totaled over $850 billion Canadian dollars last year. If a 35% tariff hits, it could rock entire sectors: lumber, farming, small manufacturers, and retail. Provincial leaders in Ontario, Quebec, and Alberta are already pushing back, and at the same time, Canada is speeding up new trade talks with Europe and ASEAN. On the surface, things look calm, but behind the scenes, Canada is getting ready to fight.